funny thing happened over the last few weeks. The analyst community has fallen in love with one of 2019's biggest losers, a company called L Brands. Okay, that's the parent of Victoria's Secret and Bath & Body Works. This thing was the fifth worst performer in the S&P 500 last year, down more than 29% during a period where the S&P gained 29%. L Brands is exactly the kind of mall-based retailer that is mightily struggling in the recent years. Same-store sales, they are atrocious. The future looks grim. The CEO, Leslie Wexner, who'd been a fabulous moneymaker long-term, has really faltered of late, kind of lost the touch. He's got this very distracting connection to the late Jeffrey Epstein. Yet, so far this month, the stock's been on a roll. It has caught not one, not two, not three, but 4 upgrades right now, including a rare sell to buy double upgrade from Barclays yesterday. That brought me to thinking, we got to look into what's happening here. I mean, what is going on? First, you got to understand why these upgrades really caught me by surprise. See, L Brands is practically a disaster area. Stocks plunged from $98 in 2015 down to 20 and change today. They have a major presence in shopping malls all over the country, especially Victoria's Secret. So the steady decline of the mall has crushed them, okay? Their location is bad. We've seen this story before. Mall-based retailer can't adapt to the new e-commerce-based world, rarely ends well. But it's not just that. It's not just the location problem. Companies also made some serious blunders over the years. Do you know that as recently as 2 years ago, management was openly shunning digital expansion strategies, with CEO Les Wexner defiantly predicting that America's obsession with their smartphones would fade away? That was an unbelievably bad call. Worst of all, over the past 2 or 3 years, the Victoria's Secret brand, it just collapsed. They're already struggling, but things have gotten much worse. I think it just doesn't really fit in the current zeitgeist. Maybe that's why they canceled their annual fashion show last year. Well, remember how hot that was? Like all the guys at Wall Street would sit around the terminals. Really pathetic. Meanwhile, there's a ton of new competition, especially from companies that were designed to operate online, like Third Love, True & Company, Trust, that's with 2 T's, and Nix, among others. I'm not all that familiar with those, but my Cracker Jack staff has filled me in that that's right. Of course, this has been going on for a long time. But management's attempts to turn things around, they've repeatedly failed. Hey, in the fall of 2018, L Brands sold off La Senza, their Canadian lingerie business, for $700 million. That's good money. Then they fired the CEO of Victoria's Secret. Then they blindsided many investors by cutting the dividend in half. I didn't like that. In response, the stock got eviscerated. Since then, L Brands keeps reporting disappointing numbers, especially from Victoria's Secret. Although it's worth noting that Bath & Body Works, which I like to shop at, by the way, is doing very well. Still, the overall business, though, is a dog. So you got to ask yourself, where are all these bullish analysts coming from? All right, I think the bulls, they may prove to be ill-advised, but they do have a thesis. They've got a thesis. See, 10 months ago, an activist hedge fund I know called Barrington Capital got involved. They sent a letter to Les Wexner demanding some major changes to unlock shareholder value. They've done many of these. In response, the company appointed a couple of new directors, recommended some corporate governance reforms, and brought Barrington in as an advisor. That prevented a proxy fight, at least for the time being. Then L Brands reported a better-than-feared quarter last May. Stock rebounded to the high 20s, although the analysts were quick to point out that these results were powered by heavy promotional activity. They were giving out incredibly deep discounts to get people in the stores, clear the inventory. By August, L Brands was able to deliver a bottom-line beat, but the same-store sales were horrific, down 4%. And management's guidance for the next quarter was terrifying, so the stock got slammed. In September, management held an analyst meeting that a lot of people were very excited about, landed with a dud. After that, though, the stock started bouncing. In November, the company reported some better-than-feared numbers, but when you drill down, the quarter still had a lot of problems. And the most recent results reported 2 weeks ago, they were downright disappointing. L Brands did not have a good holiday season. Same-store sales down 2%, although we've seen other guys have pretty bad numbers, too. Kohl's, C-O-A-L-S? No, K-O-H-L-S. Now, still, the Bath & Body Works business has been remarkably consistent. Maybe even resilient is a better word. If you could own that separately from Victoria's Secret, I think it would be a great stock. No wonder the activists at Barrington originally urged management just to break up the business. I think Bath & Body Works is thriving because it appeals to millennial love for self-care. This is a brand that's now as in as Victoria's Secret is very much out. I want to own a standalone Bath & Body Works, but we don't have one, which brings me to the bull case. On January 3rd, Bank of America kicked things off, upgrading L Brands to buy and raising the price target from 21 to 25. Their argument. They say Bath & Body Works is a best-in-class asset, and they believe management has a lot of different opportunities to unlock value here. I totally agree with that. In particular, they're hoping for a Bath & Body Works spin-off. I agree with that. As for Victoria's Secret, that could be a positive catalyst, too, if it gets so bad that management has to completely rethink the brand. Next, on January 10th, Deutsche Bank, they took L Brands from hold to buy, even as they cut their earnings estimates in the wake of a not-so-hot holiday sales report. Now, this was one of those outright, it is so bad that it's good call. As they see it, the weak results make a breakup more likely. They also point that the standstill agreement with that activist firm I mentioned, Barrington, it expires next month, so they can start pushing for a split. I think that that's very important to the zeitgeist of the analysts. This past Tuesday, KeyBank upgraded L Brands from equal weight to overweight. Their argument may sound familiar. Quote, we believe that the stark differential in performance between Victoria's Secret and Bath & Body Works and lack of any discernible turnaround at Victoria's Secret makes a value-creating transaction more likely, end quote. Finally, and this was the one that I just said, all right, come on, let's do a piece on this. Barclays came out with a coveted double upgrade yesterday. That's when you get a sell directly to a buy, don't go to hold, do not pass go. And they're making the same case as everybody else. I mean, here's how they put it, and I'm going to quote. We believe change is afoot. While we cannot be certain what form change will take, what we can say is the status quo is not an option, end quote. And look, I get where they're coming from. L Brands appears to be cheap, trading at 9 times earnings. They don't need to get much right for the stock to roar higher, and a spinoff to unlock the value of Bath & Body Works would be a home run. I do think something is in the works here, or you wouldn't get such a flurry of upgrades. It just doesn't happen. But here's the problem. Turnarounds take time, and you can lose a fortune while you're waiting for an intractable management to do the right thing. Even then, I don't think it'll happen overnight. And I wouldn't be surprised if there's another dividend cut, because the pain from Victoria's Secret is so severe. If it gets any worse, I think the business will be losing L Brands money. Of course, if you're going to bet on a turnaround, you have to get in early before there's any significant evidence that things are getting better. But considering the recent track record of L Brands, at this point, after all these upgrades, I'm a tad wary about jumping on the bullish bandwagon. These analysts are rushing to upgrade the stock at this point seem, I don't know, after the run, let's call it overzealous. The bottom line. Now, if you really want to bet on a comeback at L Brands, I'll bless it after all these upgrades. But just remember, turnarounds can be very tough. And please, 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 only buy this one gradually. Or, we got this thing, options action, the show. Maybe you want to do it with calls. And I don't recommend calls at all, but at least your downside's protected. But you know what? If you really want to buy a turnaround, could you go back to the one that I've been recommending since, 13? Could you go back to Bed Bath & Beyond? Now, that's another struggling retailer that's much further along in its turn and has a clear flight path and better management to steer it there. Why? Okay, let's go to Charles in New York. Charles.
Hey, Jim. I was wondering if this is a good time to get into the gap. They just decided they don't want to spin out Old Navy. Is it a good entry point here?
I looked at it. I did a lot of work on it. And my problem is, once again, why would you buy a faltering retailer that has an existential crisis? We have too many stores in this country, okay? Some of the too many stores are L Brands. Another part of the too many stores are Gap. Now, I went to Gap. I did a thorough deep dive at Gap when I was in San Francisco, because that's where it's from. And you know what? I bought a lot of jeans. I bought a lot of shirts. And it was expensive. And no one said a thing about it. And they looked at it. It was like, yeah. And I just feel like it's like, yeah. I mean, you got to get more than, yeah. I mean, I'm looking at my executive producer, Regina Gilgan. I spent a fortune to Gap. Did she ever say, wow, Jimmy Chill, you look good? No. Nothing. Nada. I wish I hadn't spent the money. I should have washed the jeans I had. Yeah, there you go. What did she say? Nothing. Rien, as they say in France. Jason in Pennsylvania. Jason.
Hey, Jim. Jason. Long-time viewer, first-time caller here.
Good.
My question is about Target. This year, they've given up about 15 points as the market's up 3%. The other day, I was going to buy them at the dip. After looking at their 3-month chart. But then I pulled up their 6-month chart, Ray. I was getting ready to buy it, and I saw your classic head and shoulders chart.
Oh, yeah. Listen to me. Listen to me, Jason, listen to me. That was bad, what happened at Target. Brian Cornell, who is a good guy, has to come on Mad Money and explain a little more how this was the second Christmas in a row that we wouldn't care for. And by the way, this was a major gaffe. This was not a little miss. This was a major gaffe. I want Brian on the show. Why? Because he was kind enough to admit, listen, I didn't do it right. Walk us through it, Brian. Let us go to that fabulous story you have on Flatbush Avenue in Brooklyn and lay out the case about why it's okay to be in Target. Because right now, I don't have one. I'd rather see you in Home Depot or Walmart. All right, now the analysts are suddenly in love with this thing, this L Brands. Hey, it's got some decent things, but you know what? The main thing is it's got to break up, and then I don't even know what's going to happen. Look, a turnaround is really hard. So if you want to do it by gradually, I prefer to do it in calls. Remember, I'm not saying no to this. I'm just saying we're a little late. All right, much more Mad Money ahead. School's back in session. I'm turning in tonight's homework, and it could make you money. There's a real good stock that Lauren recommended. By that way, that's one with a W. It's ALW, like the law. Then, does your portfolio have what it takes to handle the unknowns in the market? You know, let me be the judge. We're going to play the most popular game. I've been playing it now for, 19 years? And it's called Am I Diversified? And all your calls, rapid fire, in tonight's edition of the Lightning Round. She never looked at the Gap clothes I bought, and I spent $200. Stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.